just a few minutes. Started whenever you're ready.
Good afternoon, everybody. I think we have a small group today. Hopefully more people coming in. My name is Lil Keeve. I'm the project director of Small Business Transportation Resource Center. Just want to welcome everybody and please talk to us after the class if you would like to work closely with our consultant for today or maybe like for the class before. Please talk to Jessica and I, and just want to welcome everybody, and hopefully you learned something for today and enjoy the class. Thank you.
All right, great. Josh, the controls are over to you. So while he's pulling that up, if anyone is having any audio or visual problems, please let us know in the chat. We do have a time scheduled after our presentation before the break for a Q&A, but if you have any questions while Josh is presenting, feel free to drop those into the chat box, and then we can kind of stop in between and get those answered throughout. So, Josh, whenever you're ready.
All right. Hello, everyone. Looks like we got a little small crowd, but that's fun. That means we can make this a little more engaging. And like they said, happy to take your questions as we're working along. We want this to be as helpful and applicable to you as possible. I have no intention of presenting information that you don't want to learn, so I'm happy to teach you exactly what you're here for. I'm joined by my colleague, Juliana. Juliana?
Hello, sorry, I was on mute.
Juliana and I are with Clark Nuber. If you were here for the first session, or I guess Tuesday's session, you saw a couple of our other colleagues teach on a different topic. I'll go through my, let's see, give me a quick second to navigate through. There we go. A little bit about myself. I've been in public accounting for a little over 10 years now. Specific experience is in CFO controller consulting. I've also dabbled in fraud and forensics and audit. So I've been there, done that around the industry, but my forte now is the CFO controller consulting realm, which often finds me working with customers on topics like WIP accounting and job costing, because it's a little bit more of the specifics of accounting that isn't just the bookkeeping side, but it's the more specifics when you're getting into more accrual accounting and some of the more difficult parts of accounting. Primary niches, I have done a lot of work in the construction industry, which is why I am your main presenter today. I've also dabbled in wholesale and restaurant and grocery.
And a little bit about myself. I started my career at Clark Nuber 14 years ago, and then I spent some time in industry, mostly in real estate accounting. So there's a lot of real estate development in that, and that's where that job costing and WIP comes into play. I focus a lot of my consulting work on CFO and controller consulting, similar to Josh. And I'm also an adjunct at Seattle University, so I enjoy this teaching, and I will be teaching 2 subsequent courses with you in a couple of weeks on reporting and forecasting. And my primary niches that I practice in at Clark Weber are real estate, hospitality, family office, and consulting companies.
Juliana and I, as you've seen from the pictures, are both parents to kids of varying ages, which makes the times that we're currently in very fun, which is why she is currently locked in an unknown room and I am in my garage. So I hope all of you are participating in this from an assortment of fun locations. So thank you for bearing with us that we're not presenting from a little more formal of settings. Okay, goals and topics to cover today. This is kind of what's on my mind, but also feel free to share what you guys are looking to get out of this. We're going to start with the basics. You can't really do job costing and WIP accounting if you don't have a clear understanding of the difference between cash and accrual accounting. WIP and job costing, specifically WIP accounting, is on the accrual side. You can do it with cash, but it's going to be a little bit more limited, and we'll get into that in a little bit. We'll get into a little bit more about what the actual percent complete accounting method is and how it relates to construction and construction adjacent industries, and how to then apply it to your day-to-day accounting. We'll do some live action QuickBooks Online tutorials, assuming that all or most of you are working on QuickBooks Online. If you are not on QuickBooks Online, that's okay. A lot of this should be easily tailored to any accounting software you guys are using. So please feel free to still reach out with any questions you have about how what we're going through applies to what you're using, because we want this to be something that you walk away from with things to apply directly, rather than having to jump all the hoops yourself for how to take this and apply it to if you're in Sage or another accounting software. We'll walk through creating and updating an actual WIP schedule in Excel. Most accounting softwares don't have built-in integration to do a formal WIP schedule. So we often will extract information from your accounting software, put it into an Excel document that I think most of you should have received as a little example that we're going to walk through, that you can then take and apply as you'd like. And we'll walk through how to both create that and update it and keep it fresh on a monthly basis. And then at the end, we'll go through a couple of useful resources and tools that you can consider implementing in your business in addition to whatever your current accounting software is, because a lot of the job costing and WIP accounting, a lot of the information you're going to need for doing those things well and efficiently can be automated and can be made a lot easier by implementing a few often very affordable tools. So we'll walk through what some of those are, and if there's any questions specifically about those, we're happy to answer them. If we can get our first polling question. So this is kind of searching for what your company is currently doing for your accounting method. And I tried to make it as flexible as possible. Are you cash? Are you kind of doing cash but with a little bit of AR involved? Are you trying to do your best in full accrual? Or do you have GAAP nailed down and you're doing full GAAP accrual either for choice or because you have banking requirements? All right. So we're kind of split. Awesome. Love to see it. Hopefully everyone will get the information they're after. That's okay. I like it. So for those of you on accrual already, this first part might be a bit of a review, but I wanted to walk through the pros and cons of the cash method and accrual method, specifically when it comes to construction accounting. I think that there are places that the cash method is okay, as long as you are aware of the shortcomings of it. But I think when you get into growing a business that you have an intention of going beyond just kind of a small family owned and operated entity, I think having a focus for the accrual method is eventually the way to go. So we'll talk through that. So the cash method, it's very straightforward. It's logging things as they're coming in, putting them to your P&L, and moving on. You don't have to worry about knowing and understanding GAAP accounting, and you don't have to get into the nitty-gritties. That's the way that a lot of owner-operated companies will start. And accrual, it can be complex, and fortunately that's why you're all here, to learn a little bit more about how to take some of the complex concepts of accrual GAAP accounting and begin to apply them more regularly. Cash is quick and efficient, whereas accrual requires a lot more steps, like the WIP schedule. If you're just doing cash and you're just focused on how much money do we have in the bank right now and do we have a positive net income, you're not going to get into the nitty-gritties of the accrual method, but there are some shortcomings there. And cash can be best for companies with short-term projects. So if your line of construction, your jobs only last 1 or 2 days, and your expenses and your revenue are pretty quick to be coming in and going out, the cash method might be fairly close to the accrual method in terms of how those transactions are actually taking place and hitting your books. The cons to the cash method: it paints a very, very limited financial picture. It's going to give you just what's already happened. So if you're actually wanting to grow your business and learn from what's happened in the past, it can be very limiting to really have the complete picture for how have my jobs performed? Am I charging enough? Am I doing enough jobs? Am I choosing the right jobs to do? Maybe you have a couple of different lines of work that you do, and some of them are more profitable than others. And because you're just operating on the cash method, you're not able to regularly see that. With accrual, they're a lot more actionable. You can see more clearly what is actually taking place if you're doing it, and take into consideration periods or transactions that haven't happened yet but are still applicable to the jobs that you're currently working on. Cash has less information, and accrual, if you're doing it well and correctly, it can give you all of the tools that you need to be making the best business decisions for your company. And as I've seen for companies I've worked with in the past that have started off wanting to keep things simple on the accounting side and not spend too much and not overdo it, that have eventually grown. They oftentimes are kind of kicking themselves and will experience growing pains when they're also trying to put their energies towards growing their business. I have one client that I've known since the beginning. They were bootstrapping it. 2 guys founded it. Another third guy joined on, and they were just going, grinding, performing all the jobs themselves. And now, 14 years later, they're a $30 million a year company. They look very different, but they're only now realizing the shortcomings of having been on the cash method for as long as they were. They're only now realizing, wait, were we not as profitable as we were? And now that we've moved them over to the accrual method, they're finally realizing that they're maybe not as profitable as they thought, and they're having to make some really hard decisions to adjust to that new reality. So here's a little example of the difference between cash and accrual and how it can flow out to your financials and could potentially skew what your owner or what you are seeing, and therefore how you're responding on a monthly basis to your financial performance. So let's say company XYZ has a 4-month, $100,000 project with $70,000 in anticipated costs. So they're going to do $30,000 in gross margin. So for the cash method over those 4 months, let's say that they bill out $30,000 in January, they have $10,000 expenses, they're looking really good right off the bat. You might see that $20,000 net in your bank and think, all right, let's go, let's spend that money, let's go start another project, we're doing good, let's hire some people. It can really skew what you're doing. But then as you're going through the project, okay, you're able to bill another $30,000 in February, but now you're actually into the project, you're performing it, you're on the ground, and you have labor that's readily costing you. So your net income drops significantly. So now, okay, are we doing very good? Well, we're still positive, so that's good. Okay, well, let's see how next month goes. Okay, same thing. Okay, we only netted 5,000. Okay, we just spent some of that cash. Now we're tight. Okay, let's come to end the project in April. Okay, we netted nothing. And if you didn't have the outlook for the totality of the project to be able to see how the cash method was going to shake out, you might be making decisions along the way that affect your company that by April, if you're not realizing that you're not going to be pulling in net income that month and having a positive cash flow, you might find yourself running out of money. As opposed to the accrual method, where your revenues are going to be based on your expenses, you'll see that that net income is a little bit more evenly split. Regardless of how much cash you got in, you're able to see a little bit more clearly how that project performed. So you're not, in January, you're not overreacting to an amazing performance and ready to go spend. You see that you're still going to have $20,000 in the bank, but you're going to see, oh, our net income from that is only $4,200. Okay, maybe let's pump the brakes, make sure this project is going to be as profitable, because we haven't even talked about the possibility for change orders or cost overruns that can also really, really affect the eventual profitability of projects. And as you see, then as that project goes on through January, February, March, you're able to see, okay, our project is going as we thought, expenses haven't increased, and okay, we can breathe a sigh of relief that this project is working out for us just as we thought, and that net income is split among those months based on how many expenses you incurred, and you can thereby be making a few more informed decisions along the way. Maybe by March you're feeling, okay, we got this, and now we can take a distribution because we're feeling pretty good that our net income has remained high, that okay, we've got this, and we can afford to buy that new truck. We can afford to hire one more person because we have that and it's remaining consistent. We only have a small amount of the project left, so let's move on from there and be able to make decisions that are appropriate based on the actual performance of your project over the course of time. Let's do polling question number 2 to get a sense for how do you do your cash flows? What does that look like on a daily, weekly, monthly basis? Can we launch polling question number 2? There we go. So do you ever have cash flow issues and struggle to understand why? Yes, all the time, occasionally. Occasionally it gets unexpectedly light, occasionally, but we see it coming because of seasonality. Nope, you've got it. You understand how cash flows work. Or nope, we always have enough cash in the bank and I don't even look at my bank balance very often.
And Josh, there's a question in the chat window as well.
Okay.
Yes, and I can go ahead and read that to you while we're waiting for a few more people. I'll give everyone a few more seconds here. It says, how do we do this as we just get started on this portion? And how do we keep this updated with constant changes on different jobs?
Let me read that question.
Yeah, and unfortunately she says that she doesn't have a microphone, or else I would ask her to maybe explain it a little bit further. So maybe just answer it best as we can, and then see if she can elaborate if it doesn't answer.
Yeah. How do we do this when we're just getting started? Good question. Hopefully we can walk through that with you. Moving to accrual accounting is not easy. There are some more complex things to deal with. Quickbooks Online, if that's what you're working on, does have every functionality that you need to do the accrual method. It's as simple as, well, it's actually a choice that you can make when you're setting up your Quickbooks Online account, whether you're going to be on the accrual or cash method, and you can toggle your reports as such to report on the cash or accrual method. And if you're invoicing in time rather than when you receive cash, then you're putting the receipts into the bank. That's the cash method. But if you're actually invoicing the client ahead of time and putting that in at the date that you're actually invoicing and not just when you're receiving cash, that will allow you to then, when the cash comes in, to match that cash to the invoice, which will allow you to have two different dates associated with that single transaction. The initial invoice date when you were charging the client, and the cash received date, which will show up on your balance sheet.
All right, we do have another question that came through, and I went ahead and closed those polling results, so I'll go ahead and share those now. We can talk about that, and then I will go back to the question.
Okay. All right, so we got some cash issues. I like it. Hopefully we can help you guys out with this, because that's what job costing and WIP accounting, if you are brave enough to approach it, it's what it can help you with in terms of seeing a better picture for how your cash is going to actually flow out from jobs, and not just be so month to month and job to job, and day to day sometimes on whether you have cash to be paying employees or be buying equipment. So hopefully you guys can get some additional notes out of this.
All right, awesome. So just one more question real quick, and then we can continue. It is, how do you figure out the monthly accrual expense and income amount on your example from earlier?
Yes, that is what we will be covering very soon. That actually brings me to, I think, yes. We will be covering that in 2 slides, I believe.
These are great questions.
Yes, definitely. Okay, so before I answer that question right away, why the hassle? Why the hassle of going through the conversion of cash to accrual? Because it is a hassle. It is a lot more difficult than just doing things in time and, okay, we received the cash, book it to revenue. We spent money, book it to expenses. How did we do? That's that's the easiest way to do it. But again, as you are seeing, those of you with some cash flow problems, it's not really helpful in effectively answering the question. So like I gave the example of that company that I've worked with for a long time, it's worth seeing a lower bottom line now in order to see the true performance, the true temperature of the operations of your company. I think a lot of companies, when they're first starting, their focus is on how much I'm paying in taxes. So how can I finagle my accounting records to best navigate owing the least amount of taxes as possible. So let's bill as much in the next year as possible. Let's push things out, and it really it can be an okay methodology if you're only thinking short term. But if you have growth in mind for your company, I think that type of methodology can be really limiting in enabling you to see the full scope of performance of your company. And should you be growing, banks will likely require you to show them GAAP financial statements of some sort. That's, again, if you're growing, somebody along the line is going to start poking around your financials. And if you aren't able to answer some really simple questions that they're going to consider simple, you might think that they're really complex. They're going to balk immediately that you don't have records that are dependable or that you fully understand. So how are they going to be able to feel comfortable lending you money if you aren't really understanding why you're running out of cash to come to them in the first place? So if you can work hard in these initial stages to wrap your head around, okay, this is how accrual accounting works, and you don't even necessarily need to be fully GAAP compliant. If you can work towards there, that'll be a great end goal. But just starting to get your head around WIP accounting and having a WIP balance to be able to show how your financial records tie to your ongoing jobs is going to be a big leg up for going to banks. And a lot of companies are, when they go to eventually sell, if a lot of construction type companies are family owned and they think that their company is worth X amount of dollars and they go to sell and they're forced to get a valuation and have their numbers adjusted to be more true to accrual accounting, they might be in for a bit of a shock with how that adjustment shows their actual financial performance over the years that they've been around, and would therefore drastically hit the amount that their company is probably worth.
We did have a few questions that came through.
Sure, yeah, bring them on.
On topic we're on here.
Yeah.
So the first one is, what is GAAP Financial?
Good question. Yeah, GAAP Financials. GAAP stands for global?
It's generally accepted accounting principles. I just taught a class on this last week.
Man.
So just a quick high level, this is not as relevant for startups and small businesses, but as your business grows, you need to be able to have consistency in accounting language, if you will. And so there are principles for accounting in the United States, and they're called generally accepted accounting principles. And they are developed by the FASB, which is a board that was brought together to develop these principles. And if you are a publicly traded company, you are required to track your accounting using GAAP, generally accepted accounting principles. And it's complicated and accrual based. So you may never have that opportunity to have to track things using generally accepted accounting principles, But as your business grows and you start to offer more financial statements, or if you get different owners, or if you have investors, or if you have bank covenants, they may require GAAP basis financials. So a good start is just having accrual basis financials, and then you can layer in those complicated GAAP rules when needed. But I think one of the helpful things about QuickBooks Online and QuickBooks Desktop is that you can change a few things and start to record your transactions on an accrual basis. And then when you're running your reports, and I'll go over this in the report running class, you can just click accrual and it'll kind of change the date that it's registering these transactions on an accrual basis, the best way that QuickBooks can. So while for tax purposes, you have to establish cash basis or accrual basis, and then you actually need to make like an official change at the end of a tax period. It is helpful to know that you can start to see the difference between how the reports are ran using that reporting accrual versus cash. And now that I know that that's going to be a topic, I'll make sure I bring that into my class. So yeah, large companies are required to use generally accepted accounting principles or GAAP. And smaller companies, if they can, should be using accrual basis financials.
And how that generally ties in with a bank is really there's nothing stopping you from, besides the IRS, there's nothing stopping you from doing your books however you want. You can put cash in and you can record it to whatever category you want in QuickBooks Online. It might not make sense to somebody who's looking at it because you're just putting it wherever you want. GAAP is the method of here's what we're all agreeing are the rules. Now, like Juliana said, only public companies are held to those rules, but for private companies, it can be a good general set of guidelines that can be applied to then be able to take to a bank, because they're looking to know that you are speaking a certain language that they're used to, and that they're not going to be tasked with digging through all of your records to make sense of what your company is or isn't doing and how it's performing or how it isn't performing for you. They want you to be coming to them with a good sense for, a good reliable sense for how your business is doing. So this is kind of the start to that. Looks like there was one more question in there.
Yeah, it is your printout reports from QuickBooks Online acceptable to give to banks for this GAAP financial lending?
It can be. The difficult part about GAAP and accrual is that there are a lot of rules to follow, particularly when you're trying to go full GAAP. There's a reason that Julianne and I have full-time jobs doing accounting. It's because it's uniform, but it's also complex in its uniformity. So there may be some guidelines in there that are a little more difficult than others to implement to a small business. So pursuing simple accrual basis books, putting in invoices as they happen. When you receive a bill for your utilities, are you putting that bill in for the date that it was invoiced by the utility, or are you putting in the date you received it, and therefore when you pay it, it's hitting your expenses? Those are two different things, because you want to be in accrual accounting. The goal is to be matching your profit and loss statement to the activities that actually took place in reality during that period, rather than when cash was paid or when cash wasn't paid. Because if you're only dealing in cash, you then, as the bookkeeper or business owner, have the capability to kind of fudge your books for better, I don't really love that term, but essentially manipulate your books a little bit based off of when you do or don't pay something. If you're on the cash basis, you can make yourself look like you had a profitable month just by not paying your bills for a month and paying them a month late, which a bank would immediately stick up a red flag to when they see, oh, wow, you had a $20,000 net income last month, but the next month you lost $30,000. Okay, I'm going to question that the accuracy of that gain against that loss. And if you keep pushing things out, then it's not going to look great for your company. Hopefully that answers some questions, but feel free to keep bringing on those questions because we're happy to clarify some of these things. They're worth clarifying for sure. My last point on the why the hassle is related to fraud protection. I've seen a lot of construction related companies that that have employees that are taking advantage of the company, whether it's project managers, I think, are sometimes the likely culprits, especially if they have credit cards that are issued by the company. If you're not looking at your books regularly and doing it from an accrual method and looking at your job performance on a regular basis, there is a lot of room for somebody to go in and take advantage if you aren't keeping track of your job performance over time. Okay, so this, for those of you that weren't quite sure what GAAP was, this might be getting too much into the weeds, so bear with me. I'm just going to lightly touch on this. So GAAP accounting says now the way to recognize revenue is based on this guideline called ASC 606. Don't worry, if this is already overwhelming, you can hit pause, take a deep breath, because I had to as well when I first heard about this. More or less, it still allows for both a completed contract method or the % complete method of accounting methodologies for recognizing revenue. So it's all based on when your job has performance obligations. So if you are, if you're building a house, you might have multiple performance obligations, but your end one is deliver the house, deliver a finished product. A finished product isn't a house that is half built, but still there is labor, there is wood being used that's being put up, so that if a project ended, if you all of a sudden backed out of the project, there is still something that is left to be delivered to the customer, which would allow you to be recognizing your revenue over the course of the build. And that's what we're talking about. So if you have a long-term project that is showing progress, that is creating something tangible for the client, you can be recognizing revenue over the course of the project length and not just when you deliver your final product. Juliana, does that make sense? That didn't feel as clear coming out as I wanted it to.
It's a complicated new principle, and what's relevant about it with small businesses is we have seen small construction and real estate companies need to implement this, and also software as a service companies. So it's in simplistic terms, it's just recognizing a portion of the revenue based on measurable targets in your contract, as opposed to just when you get the cash. And I think what makes most sense is sort of recognizing the revenue on a contract when you're spending the money to work on it. So from a simplistic view, it's just kind of allocating the way that you recognize. So if you have like Josh said, if you have a project to build a house and you're spending 15 grand a month to build this house that you hope to get paid out for in 6 months, then you would recognize your expenses of $15,000 a month that you're actually paying out. And then you'd also recognize $15,000 of revenue, or whatever the proportionate share of revenue would be. I wouldn't overthink it or think about it too much right now. Just understand that it's out there. And if you need to start, think of like a percentage of completion. If you hear those types of words, or recognizing the contract revenues, then think, ooh, maybe I should look into whether or not they're asking you to implement this standard. And then you can kind of go down that rabbit hole at that time. But it's just good to know that it's out there, and it might come up at some point.
Yeah.
I wouldn't be scared of it though. You'll know when it's going to come up.
Exactly. So all of that to say, most of you, I would think most construction and construction adjacent firms are going to be able to use what's called the percent complete method for recognizing revenue. And that's based on how much you've billed to date on that project, not how much not how much you have invoiced to your client, but how much you have spent, or how much labor you've put into it, or how much inventory you've spent on it. And we'll go through that a little bit more. And it allows you to recognize your revenues and therefore your gross profit incrementally, rather than whenever you happen to be progress billing your client. Some industries are able to bill a lot up front so that you can have the cash to then pay your people and pay for the inventory that you need in order to complete the project. But that, if you're recognizing on the cash basis, can really skew how your business is actually performing. So this allows you to then spread out your revenues and therefore your profits over the course of the project, so that you're seeing a better reflection for how did I do this month based off of the work that was actually performed, and not just sending a bill for something that's going to happen in the future. And that's where you can get into cash flow problems, is if you're able to put out an invoice for 50% of the project before you've even done anything, it's really gonna challenge you to be diligent in how you spend that money, and the performance of the project. If all you're seeing is, I have $50,000 in the bank, what do I do with it? And how do I have how do I make sure that I'm spending this in the best responsible way? And so when you're doing this, your unearned revenue is going to be held as a liability on your balance sheet. Those are some big terms. So all this means is, when you put out that first bill for $50,000 on a project that you haven't spent any money on yet, that amount is not going to hit your profit and loss statement. So where does it go? Because you put out an invoice, so that invoice is going to be sitting in accounts receivable. Where is the other side of that entry? It's going to be held as a liability until you have earned the revenue by spending money on the project. And we'll get into that a little bit more. Real quick polling question. Does your company currently have any bank requirements to maintain GAAP financials? I'm not sure about the size of the companies that are represented here, so it might be nobody, but I'd be curious to hear if anybody does, because that can really force your hand to learning some difficult concepts really quickly.
All right, I'll give everyone about 10 more seconds,
Sure.
see if we get any more answers. All right, I'm gonna go ahead and end the poll, and then I can share those results. It looks like it's pretty the same across the board.
Okay, all right, that's good. And Again, like I said earlier, just because you don't currently have this requirement doesn't mean you shouldn't be keeping this in the back of your mind and have some goals. If your goals are to continue growing your company and to grow it to be something substantial, to have in the back of your mind, I don't understand what GAAP is, but if we're going to grow, I might need to, or I might need to know somebody who does, so that we can be making small to medium-sized efforts along the way, and not be trying to cram the knowledge of the complexity of GAAP compliance when you really need to, and you're really needing a loan, but you're now faced with cash problems and the difficulty of learning a whole new system of accounting. So something to think about. If this feels uncomfortable, that's okay. If you don't have any requirements to do it, that's great. But be mindful that you might need to learn it down the line, or you might need to learn some of its concepts down the line in order for the company to continue on a growth path. Okay, so now let's get into a little bit of the nitty-gritty with how we actually do some job costing in QuickBooks Online. So give me 1 second to switch over my screen so I can be sharing. Bear with me. And while I'm doing this, if anyone has any questions, feel free to be posting them. More than happy to be answering as many questions as you have. Okay, I sufficiently convinced QuickBooks Online that I'm not a robot, so now I can share that screen with you. Okay, is that showing up? Does everyone see my QuickBooks Online screen now? Did that switch? Okay, great. Okay, so a lot of this will start in the projects section. And here we are given the option to start a project. So let's start a new project. Let's say we are going to build the new light rail in Bellingham. So let's do so we'll name the project Bellingham Link Light Rail. Let's put in our customer. Let's say we were hired by Cookies by Kathy to do it. And let's in order to keep track of our projects, because when you get into having a lot of projects, it's safest to be assigning project codes, so that if you happen to have multiple projects with the same customer, with the same address, that you can more easily keep things straight. So let's say that this is project number 001. So this will be your hub for how to track the ongoing costs and the ongoing revenues of your projects. The good thing about QuickBooks is it lets you essentially run the entire life cycle of the project right here, from the beginning where you're even just putting out an estimate to the end where you're finishing up your final billings and you're invoicing, you're applying all the costs that go to this job. Do I see that there is a question? Oh, just a link. Okay. So the first thing we're going to do is let's add an estimate.
We did just have a question come in while you're setting this one up. It is this project, so the project section that you were on, is that just on the online version or is it also on the desktop version as well? I think we do have a few desktop users here, if I remember right, from Tuesday.
Yes, it's going to look a little bit different, but yes, QuickBooks Desktop does allow you to create jobs.
Okay, perfect. And then they also wanted to know if the project section is fairly new to QuickBooks.
I feel like most things are fairly new to QuickBooks Online. Intuit is very rapidly trying to grow this as the future of their accounting offerings. I think they're trying to phase out desktop as much as possible. So I'm not sure when projects was implemented exactly, but I would assume that, yeah, it's probably fairly new, but so is the QuickBooks Online model itself.
All right, perfect. And then do you know what version you're using right here? They want to know if you're using the Plus version or what version you're using of QuickBooks.
I believe this is just the basic version. This is just the sample that they offer. So I don't think that there are any bells and whistles applied here. This should be available. Juliana, do you know?
I don't know, but can I confirm that and we can send out a subsequent email? That'd be okay?
Yeah. I believe that this should come standard, but I haven't been involved in the actual purchasing of a QuickBooks online version for a client in a while. So good question, and we can get back to you. If you don't see it when you log into your QuickBooks Online and there isn't a projects tab, I think that answers your question that you might need to consider upgrading, but we'll definitely get back to you on that. Okay, so we have an estimate. We're going to put it out to our customer, Cookies by Kathy, and let's make the estimate as of today, and she has to reply to us by next week. And we're going to be building her a house. Or let's see, what are the offerings here? Let's say, sure, let's do installation of landscape design. So we're going to do, let's say this is square feet, so we're going to do 1,000 square feet. So it's a $50,000 project. And in here, there's a lot of different things that you can apply. You can apply a discount. You can include your sales tax. There's a lot of tinkering that you can do, and I can show you how you can actually customize the look of this as well. QuickBooks has a lot of kind of hidden customization options that do make you, that do enable you to more customize this to your actual needs. So for now, we will save and close. So we now have an estimate for this project. We're still showing no income and no costs, but we do have an estimate in here. So if you're curious about how to customize your estimate form, click on this gear up here, your settings gear. It's always a good place to go besides the help function for kind of the back end of QuickBooks Online. Go to custom form styles. and you're going to create a new style, a new estimate style. So while you're in here, you can also change how your invoices look going out. You can also, if you're in the business of providing receipts to people, in addition to the invoices, if you need to show an end receipt, you can also customize the look of that. But for now, we'll just look at generally how to customize the looks of your estimate. So here's what it's going to turn out to look at the end of everything. Should you use all of the form options that are currently there. You can also add and remove things. So when you go to, so you can design it, there's templates in here that you can play with to make it really look the way that you want it. Let's choose something really basic. You can add your logo, change the color, font, so all very stylistic options. But if you go to content, that's where you can make a little bit more customizations for things that you do and don't want to include on your estimates, your invoices, and your receipts. So if you want to change the business name, so say you created your Cookbooks Online account to be your actual company's name, but you operate under a DBO, you can come in here and change the business name that you're actually showing to a client. Email, you can add a phone number, address, website, all this you can click on and off. So as you'll see, that shows up here. And if I click it off, it doesn't show up anymore. There's a lot of things you can add here. You can use custom transaction numbers, or you can have QuickBooks create a transaction number for you. And you can also add things like crew number up here, or if there's a different type of job, you want to be able to show them your job number because maybe you have multiple jobs with one client and you want to be able to show them this is what job we're billing you for particularly. You can add that so that when you create your estimate later, you have a box to then fill out with that job's name. If there's no questions about that, I'll continue moving forward. Give 30 seconds for questions on that.
I did just have someone say that they can't wait to try it because they didn't know that this was an option. So
perfect. Glad to hear it. Okay, and like I said, I'll show you again really quickly. You can do the same thing for your invoices. You can change up your template, make it look nice and fancy. And again, you can change the content. So all of these little pencils up here in the gray area, those are areas you can click to edit. Okay, this is going to be editing this information up here. Or if I click on this pencil, it's going to allow me to show what I'm showing to my client. So if I don't need to include descriptions to anyone and all I'm doing is just billing for products and services and I don't need a detailed description, you can take that off. Depends on what line of service you're in. If you don't have any quantities that you're offering, you're just doing fixed pricing for a single thing, and you're not selling them 2 widgets, you're selling them a home and an addition or something, you can remove that quantity as well so that you're not showing them data that's not relevant. If you actually are doing products that have SKUs, there is an option to include that, but it looks like with QuickBooks Online, you have to have a separate offering in order to do a full SKU and inventory with that. And same with this bottom section down here. You can customize your messaging. That's standard. You can also change that when you issue each invoice, but if you want to have your company tagline at the bottom, you can update that as well, and anything else that you want to have. Thanks again. And that will show as well at the bottom. That's your footer down here, or if you want to have some sort of, confidential, you can have that included standard on all of your forms as well. Okay. You can also be displaying whether you are requiring them to have a deposit. That's where you can click for that as well, to show that that's your expectation, or if that's already something that they've done. So you can show, okay, this is how much it costs, but we're recognizing that you've already sent in $10,000. You can add that as well. And you can also include an estimate option here too. Okay. So now that we're in our projects, let's scroll down. It's not letting me scroll because my screen is too big. There we go. So here's our project that we currently have going. I'll click in there. So now we can add things to this project. If we want to add an invoice, we want to do our first invoice to the client. It autofills because we selected that project. We were already in that project, so it automatically filled that this is an invoice for our Bellingham Link Light Rail. Here's all of your terms. So here's where you get into a little bit of the difference between how this is going to show up for cash as opposed to accrual. So we're sending this invoice today, and they might not pay it until later. But QuickBooks is going to recognize this as revenue on the date that we are invoicing, if you're doing it on the accrual basis, which is what we're going to be adjusting later on when we're doing our WIP calculation. So you can do a service date. So say we're going to be building, or we're going to be doing this landscaping starting October 1st. And there we go. So now we have income on our project and no costs. And from there, if we want to recognize some expenses, so we went to Hicks Hardware and we had to buy some sprinklers that were for this project. So now this is showing us in real time, assuming all of these happen at the same time, what our net profit is, or what our gross margin is, excuse me. In here, QuickBooks allows you to be actively demonstrating the status of the project. So once you have once you are relatively sure that your project is completed, all of your bills are out, and all of your costs are recorded, you can recognize the project is completed. If you put an estimate out, and you get, a month into your project, and all of a sudden the client pulls the trigger and says, "No, we're done," you can recognize it as canceled, so you can keep better track of the actual current status of all your projects. So you're not constantly wondering what's actually still going on and what's not. And then once you do that, when you're in your projects, QuickBooks allows you to filter through the status of your project. So if you want to do an analysis for, okay, we have 5 projects completed now, how did we do? You can go to this completed section and see, okay, what was our profit margin? How did we do now that we know that everything is in here at the end of the day? Or how much money did we spend on canceled projects? Did we lose any money on there that we can't recover? So we can maybe be a little more choosy about working with certain clients in the future. Are there any questions yet? I'm going to quickly check in with my PowerPoint presentation to see where I'm at.
I think we did. I don't think it's a question. I think it's more of a comment. They said, according to the QuickBooks Online information that they had, QuickBooks Online Plus offers the option to track project profitability.
Yeah, I looked up our QuickBooks Online pricing, and it lists out all of the features. And the features that are offered under Plus is the track project profitability and track inventory. Sending estimates is offered as early as the Simple Start product. So hopefully that answers everything. Oh,
That was your comment, so I didn't know if you wanted the chance to kind of elaborate.
yeah, no problem.
And then we did have a question that just came in. It is there a way to track percentage complete for billing purposes on the job in QuickBooks?
There is not, and that's something that we will be getting to in our second hour, going through how to take the information that is going into QuickBooks, your revenues and your expenses that you've incurred to date, and get a percentage of completion revenue adjustment to then put onto your books. So we will cover that.
All right, awesome. I don't think there's any more questions for now. So we want to
Okay.
go ahead with the presentation. And I do think that we have a break coming up here soon.
Sure.
So whenever we kind of have a stopping point, we'll go ahead and take a short break for everyone.
Yeah. Let me do this one slide real quick, and then we can take a break.
No worries, take your time.
Okay, so after you've created your job, the different items to be linking to your jobs are really important, that you actually get the full picture of your job's performance in QuickBooks, so that you can then take it and apply it to your eventual WIT calculation. So the items to link to your jobs, your revenue. So you're gonna have your estimates. If you want to have estimates, you definitely don't have to be utilizing the estimate feature if you don't want to, but it can be a good way to be tracking against how much you've invoiced to the customer. QuickBooks will allow you to, when you're creating an invoice from an estimate, it'll allow you to see the remainder that's left in your initial estimate, so you can see, oh, we've only invoiced 40% of our project so far. There's more to be invoiced out there than our original estimate shows. So it can help you keep a little bit more track from if there's a little bit of communication issues with your PMs for what has been done and what hasn't been done on a project to date. And you also want to make sure that your direct costs for the job are applied. So that goes with your labor. There is a way in QuickBooks Online to attach your labor to jobs. We can go through that after the break if that's relevant. Just if you guys want to see that, please drop a note and I will happily cover how to do that after the break is done. And of course, your materials, like we showed, putting when you incur expenses, if you go to the hardware store and you have to buy those sprinklers for that job, making sure that when you're putting that invoice into QuickBooks that you are saying this sprinkler system was for this job and not just a general expense that will just hit your P&L and go unapplied against the job. It's really important. And with that, let's take a break, if that works.
Yeah, perfect. I think we probably have time for about a 5-minute break, or we can make it 6 and we can come back at 20 after the hour. I'll go ahead and put that in the chat box. If you guys do have any questions in the meantime, feel free to drop them there and we can discuss them when we get back. There was some feedback, Josh, on the subject you were just talking about, that they do want to see a little bit more about what you're talking about.
Okay, great.
So kind of a heads up.
Yep, I will cover how to apply labor.
All right, perfect. Yeah, if everyone wants to join us back, I guess now 5 minutes at 20 after the hour, we'll go ahead and get started again.
Great, thanks everyone.
Hey, Jessica, do you think that we have time for maybe about 5 more minutes and we give everyone a little bit longer of a break? I do think 5 minutes went by pretty quick when I looked up.
Yeah, no problem.
All right, perfect. So if everyone wants to go ahead and meet back here in about 5 more minutes, we'll go ahead and take a little bit longer of a break. All right, everybody, as you rejoin us, if you want to go ahead and leave us a comment in the box, or if you select the participants button at the bottom of your screen, it'll pop out the participants, and then down at the bottom, you can either raise your hand, you can use the yes with the check mark feature, something that just lets us know that you're back. And then when most everyone is here, we can go ahead and get started. All right, for those of you just now joining us back, if you can either let us know you're here by saying so in the chat box, or if you select the participants button at the bottom of your screen, it'll pop out your participants section. And then at the bottom, if you want to go ahead and hit that yes green check mark to let us know that you're here. After we get everyone back, or at least a few of you, we'll go ahead and get started again. All right, it looks like most everyone is back. So Josh, whenever you're ready, if you'd like to reshare your screen, we can go ahead and get started again.
Sure thing. Welcome back, everyone. Hope you got something fun to eat or drink. Okay. Go back to the PowerPoint slide now. So once your job is created, like I showed you how to create your first set of jobs, items that you want to be tagging to that job once it's in there are invoices, payments, expenses, if you create estimates, your purchase orders, and your bills or your time, all to that job code. And I'll take you through how exactly to do that. I'll both show you, and I believe these slides should be available to you all after this. So there are instructions included here in the slides that you can revert back to. So in order to apply an existing expense, so something that already exists in your books that you're now going to go in and apply all of this job costing information now that you know about it, you can go to your expenses. You can find and open the transaction, and I'll run through this in the live version of Excel, but I'll talk you through it real quick. You'll select the project from the drop-down menu next to the item in which you want to be coded to the job, and then you simply save and close. So I'll take you through what that exactly looks like real fast. Switch to over here. Okay, so I went to expenses, and this is what it shows me. So these are all previously entered expenses. So say I want to, I have this job expense for some plants and soil that I bought for our job. So let's go in here and let's say, okay, I want this $23.50 to be applied to the job that I just created. So I'm going to go down here, and you'll do it by line item. So it actually enables you to, if you went to the hardware store and you bought things for multiple jobs, you can break out the amount that you paid for by job. So let's just say this whole $23.50 was for our Bellingham Link Light Rail project. So now that that's chosen, we'll save and close. And now when we go back to our project, that should show up as an expense. Okay. Same thing, let's go. Went to Tanya's. And we apply it to that project. Similarly, if you have time that you want to apply, you'll go to your sales. You can filter for let me consult with my instructions really fast. Let's make sure I'm doing it right. Yes, we need timesheets. And I don't know if this comes standard with timesheets. Let's look to see. So if you go to all sales, filter for timesheets. Doesn't look like it comes with timesheets. Okay, so let's do it a different way. So if we want to enter time, if we go to our project, we selected our project that we created, we're going to choose to track our time in QuickBooks. So we had employees that were working on this job this month. Let's say they did work today. Emily did some work for us. She costs us $20 an hour.
Josh, we're not seeing your screen. We're only seeing the.
My apologies. Thank you for letting me know. There we go.
Sorry about that.
Start over. Okay.
It was showing and then it disappeared. And we did have a question real quick to Josh. After this, they would like to see a split transaction.
Oh, sure. It was showing and now it's not showing?
It is now showing, yes.
It is now, okay. Okay, so I am in our project. We'll add some time. So there's our time activity. We'll click down here to track our time. So now we're saying, okay, today, Emily spent 3 hours there. And she costs $20 an hour. And if we want to confirm that we're applying it to the right job, because we created it from the job, it's already linked there, but in case you want to double check, it is going to the job that we created. And if we wanted to send it to a specific service code so that it goes to a particular expense line, this is how you can do it. So let's say this is our service is hours towards landscaping. We're going to say that it's billable to the client at $30 an hour. We'll save. Now her time activity shows up. And when we do a project report, her time now shows up. Does that make sense? Okay, and I can go back and do a new expense. Okay, so for this, I'll do a new transaction to show you how to say you went to the hardware store. Where did we go? We went to Hicks again. And we pay with our MasterCard. And we bought some sprinklers. We paid $215 for those. So those were for the project we already created. We also bought some more sprinklers. For another $215.66. And that we can apply then to, let's say we are also doing some work on the Red Rock Diner. Obviously that's right now currently set up as a customer and doesn't have a project assigned to it. You don't always have to have split out projects if you don't want to. I would advise it for project tracking. It's always best to have a customer and then a project assigned to it, just in case your customer ends up coming back to you for work. That way you can be tracking each separate project on its own rather than having to create duplicate customers down the line. But for simplicity's sake for this, since we have only created one project right now, let's say we want this to be applied to the Red Rock Diner. And it's as simple as that. We apply it there and we save and close. And now if we were to sort, I'll show you how that comes up. So if you were to look at your profit and loss, it should show up. Maybe my time period is wrong. I don't want to waste anyone's time, but this this should, let's see.
So Josh, was that the split that you were showing us?
Yeah,
Okay.
because it's a demo version, I'm not sure how this is all linked to. There we go. It's down here in job expenses. So now if we look, those should be split. So there you can see two separate transactions. And if we were to click on that, we can see that they are still split by a customer. Is that helpful, everyone?
Yes, thank you.
Great. Okay, let me go back to my PowerPoint.
Josh,
Yes.
Earlier you showed a split. Does it show up automatically on the invoice, or do you have to generate the invoice on its own?
When are you talking about invoicing a customer for work that you're performing? Or are you talking about when you're paying for hardware?
So earlier you paid for the hardware. So now it adds up to the job cost.
Mhm.
So does that, does QuickBooks track that cost for you? So when it comes time to bill that customer who you bought the parts for, it kind of adds it to your job cost. So then
Yes,
part
yes,
of the invoice.
yes. QuickBooks does. Let's do this. So if we look here, so we should see that expense. So that $215.66 is here for those sprinklers that we bought, and we marked it as billable. So we can now, if you wanted to create a separate invoice for it, you can now click create invoice from it. Oh, I'm not sharing again, huh? Oh, there we go. I'll walk back. So you can now see that that $215.66 is showing in our project, in our transactions. And because we marked it as a billable expense, you can go over here to this action column. And if you wanted to separately bill your clients for that specifically, you can go click create an invoice. And this will bill them, and you can increase the amount that you're charging them to whatever you want. If you're going to charge them for cost, or if you're going to charge them more, you can change that on here and add your description. And this would create a bill so that you can track whether you have billed for those or not as well. Similar with time. So if you look on the side over here, if you wanted to also bill for the time that we recorded for that employee, you could add that to this invoice as well. And because we told QuickBooks earlier that we were going to be charging the client 30 bucks an hour, she only cost us 20, but we're going to be charging for all 3 of her hours at $30 an hour. It automatically added that labor to the invoice as well. So say we wanted to upcharge for those sprinklers and charge 300 bucks where we paid 215. Can put in that we bought sprinkler heads. And that changed my cost. So because I put in a different product than it had already put in here. But if you had, when you put in the original bill, if you would have put in the actual product and service that you were charging for, that would automatically show up here. So that wouldn't change, but I can change that back to $300.
Okay, thank you.
Yep. All right. You can add existing invoices too. So say you have already invoiced some clients and you're just wanting to do job costing now, you can go back and apply it to a job the same way that we've done it. So if you find that invoice in QuickBooks Online, you can click on it, and at the very top, you can click the project that you want to apply it to. There are some tricks with this if you've already received a payment against it. So you're trying to go through and clean up your books based on the talk that we had today, and you've already applied a payment against it. There's some extra steps that you're going to need to take. I'm not going to go through them in specifics now, but these are the steps that you would need to take to reapply that payment to the new job as well. Unfortunately, with QuickBooks, they register payments and invoices. They try and tie them together as they happen, but if you go through and change one retroactively after applying the payment, it's not also going to tie to the payment itself. So you're going to have to manually go back and update for the payment to be applied to your job as well. But hopefully these instructions are clear enough to help you go through what you need to do in that circumstance. All right, before we dive into doing our WIP calculation, I'd love to learn a little bit more about the businesses you guys work for. So about how many projects or jobs does your company typically have active at a given time? Okay.
All right,
Not too many, which is really helpful.
about 10 more seconds. Looks like we have a couple people who haven't voted yet. All right, I'll go ahead and close the poll and I'll share those results for you.
Okay. Great. Well, that makes things a lot easier for tracking the amount of information that we're going to need to be looking after. It's going to make updating your Excel file and updating your QuickBooks a lot easier. So that's excellent. Okay. So what is a WIP schedule when it comes to adjusting your financial records to be on the % complete method? The importance and goal is to have a financial reporting tool that shows if you're over or under billed and cash positive or negative on a project. And not only for each project, but all of the projects when taken in aggregate as well. It's also an early warning if a project or projects are going over budget. If you're monitoring this on a monthly basis, it can really help you initiate better conversations with project managers to tighten things up or to learn from their mistakes on the project in order to better manage upcoming projects. And if you're talking with banks again, they will often scrutinize your WIP schedule pretty heavily because they're going to be very interested in having you demonstrate where the actual status of your projects are. Again, like I mentioned earlier, it's one thing for you to be able to show them we had a really good month last month. Our net income is great, but they're going to say, well, do you have any ongoing projects right now? And what's the status of them? And how do you know that when it comes to your final bill and actually finishing, that you're going to come out on top and that the money that we're lending you right now isn't going to end up being unable to be repaid because you're at the end of the project, you're actually ending up underwater. So they're going to be really interested.
Oh, sorry.
Yeah, go ahead.
Could you explain what WIP is for everyone who might not know?
Sure, yes. WIP stands for work in progress. It's trying to take the projects that you have going and be able to demonstrate on your balance sheet and your profit and loss the actual amount of expenses that have taken place, and as we talked about earlier, applying the revenue to those expenses that have taken place so far. And again, when it comes to selling your company down the road, or if you're going to be looking at buying another construction company or another company similar to your fields to be able to create some synergies and do some more comprehensive work, you're really going to want to scrutinize or have scrutinized your WIP calculator to be able to know what liabilities you would be taking on, or whoever's buying your company would be very interested in learning what liabilities are still out there for the projects that are ongoing. We'll go to our last polling question. I think I know the answer to this, but I'll put it out there just in case. Have you ever created a WIP schedule before? Okay, all right, we have some takers. That's great. Glad to hear some of you have done this before. Hopefully you can glean a little bit more information off of this to really tighten up what you're already doing. So what do you need in order to build a WIP schedule? The name and the concept implies, I think, a lot more difficulty than it actually is, especially if you're not trying to build one from scratch, which is why we supplied everyone with a template that I do actively use for a few of our clients. So this is something that I took and made some adjustments to remove any confidential information, but this is something with the formulas already built in that you should be able to take and apply immediately. So you'll need your job, which is why when you're building your jobs in QuickBooks, it's really good to give them unique identifiers, whether you're giving them a separate job number or just giving them a unique job name that's easily identifiable. It seems like since most of you are dealing with 1 to 10 jobs at any one time, it'll be fairly easy to keep those straight as opposed to some of the bigger construction companies that I build this for that might have hundreds of jobs going on at any one time. It can be a little more important to be including a unique identifier separate from the job name so that things don't get lost in translation and get easier to be looking up and applying the correct amounts to. You also need your total contract value, including any change orders that have happened to date. This is really important to be updating regularly as change orders happen on projects to make sure that your intended or estimated profit at the end of the project is staying accurate. So if you, and that goes with estimated costs as well. If you all of a sudden see that a project is incurring some more expenses than anticipated and you can be charging those back to the client, we really want to make sure those are captured. And similarly, if you realize that you have some overrun that you are unable to bill back to your customer, it's really important to include that so that your financials begin to more accurately reflect the actual monthly happenings of your projects. And once you have this tool in place, it can be a really good, though maybe challenging tool to be having more honest conversations with your project managers, your owners, whoever you're going to for the status updates of your projects, to be showing them this is really important that you keep a close eye on how much we're getting done and if we're actually staying on budget compared to what we expected this to cost and where we expected our biggest pain points to be, or our most expensive parts to be. Hopefully when you're building out your invoices and your estimates, you're looking at it from a little bit of a granular scale to be able to then piece out when you're doing a project. Say you're building a home, and it's really important to be pricing out as the project is going. So to be able to say we expect demolition to take 5 hours and therefore cost us $100. That way, when you get done with the demo and it took 10 hours, you can then take that information that you gleaned, update this with the increased hours that it cost you to do this. And if you're not able to pass that cost along to your client, your end margin for your project will be reflected here, so that you can have a better sense of, okay, we really need to tighten things up because we just lost money on our first portion of this project. So we need to make up money somewhere else, or be spending our money more wisely because we're now working on a thinner margin. In addition to all those estimates and your contractual revenues, you're going to want to be including your actuals to date. So you're going to look into your QuickBooks job that we created and pulling out, okay, what's actually happened as of this month end. So we're going to look at what actual costs have happened to date. We're going to look at what we've charged the customer to date, and that's going to churn out what our gross profit to date is, and then give us at the bottom there our under or over billed amount. That will be what adjusts our revenue that we recognize for that period. And this is pretty heady, and it will make a little more sense once we get into our spreadsheet. So like I mentioned, the important information to gather here is your project, your estimated revenue, plus change orders, your estimated cost, plus change orders, your actual revenue, and your actual costs to date. When you boil it down, that's not all that much information to gather in order to really help fine-tune your financials to be more in line with what's actually happening with your projects. With that, I will take you to the Excel workbook. I believe everyone should have received a copy of this to be able to follow along. But if not, I will pull it up here so you can follow along with mine. Can everyone see that?
Yep, you're good to go.
Okay, great. So again, this can look a lot more intimidating than it actually needs to be. As much information, it's important to have as much information on here as possible. But in order to have this feel approachable, let's take it nice and slow, because having an Excel workbook that's this many columns long can be really intimidating to be filling out. But if we take it one step at a time, hopefully you'll see that the formulas that are already built in here will really help this to be a little bit more of a seamless thing. So let's add in a new project. So let's call this project A004. Let's call this, let's do sprinklers for Joe's house. And this is where you would update the stage. So I'll leave this to, let's say we sent out our first bill but we haven't started the project yet. And they signed the contract on the 10th. And it was a contract for $100,000. No change orders yet because we just started. We expect our costs to be $70,000. And this information this information here won't go into any of the formulas that are happening, but it's helpful to have, based on the type of service you're offering, it's helpful to keep track of specific milestones so that you can have a better sense for the approximate stage that a job is at, so that when you see, wow, we've spent a lot at the end of this, but we're still early on. Like we haven't even reached our inspection pass date, that, okay, we might be in a danger zone, that somebody's not telling us that there's a cost overrun here, that you can then take back to your PM and say, is this right? Have we really spent $60,000 and we're not we're not even halfway done with our project yet? What's going on? We need some answers in order to be generating those conversations of, are we going to remain as profitable as we sought out to be? Because ideally we're going to make $30,000 here, but if we're 50% done and we've already spent 60 grand, we either got to tighten up or we got to eat our loss here. So let's say we have received our security deposit. Let's say it's we received it today. And that's all that's happened so far. So this is our contract information here. If you use other tools like Salesforce, Salesforce is an example. We'll get into this a little bit later, but Salesforce is an example of a third-party product that you can use to help keep track of these types of dates and completion percentages and how far along. That's all stuff that you can work in Salesforce to customize to your specific business type, so that you and your PMs can be going into that system to be updating routinely. Okay, we've completed phase 1, which was demo. We're on to phase 2. We're laying the concrete. We're on, and next up is phase 3 to be building our walls and sheetrocking. And then you can bring that information into here so that you can be not only having financial information that you're seeing and then presenting to the owner potentially, but also have the information that's relevant to a PM. So if you have a question for them, you can show them, hey, this is what I'm seeing based on the information that's out there for how complete our project is, based on the information you're providing, and the information I'm seeing in our financial system is showing me a different story. So let's have a conversation about that. So far, we have put in our intended contract amount, our estimated cost. And now let's say we've set up our project in Quickbooks, and it happens to have the same name. Sometimes they can be different depending on how you run your systems, but let's assume that we were able to do the same name. And let's say right now we have bills, we have no costs, but we have, according to this, we've sent out and received our security deposit. So let's say our security deposit was half of the contract value. So we billed $50,000 to date. Now all of the rest of these are formulas that I can take and copy and paste. and it's going to give you what your remaining billings are. So you still have 50,000 to bill. You still have 70,000 in costs because you haven't incurred any costs yet. You still expect your margin to be 30%, but you're currently overbilled by $50,000. So if this is the way that your project ended at the end of this month, you would then go to QuickBooks and do a journal entry, and I can show you how to do that if that's of interest to people, to remove $50,000 from revenue and move it to a liability account. And that's the difference between your cash method / billing, or what standard accrual would even say, because you have this bill and because you billed it and you booked it to revenue. QuickBooks is going to say, hey, you have $50,000 in revenue.
I'm sorry, Josh. I kind of missed that. Why did you move that over to underbillings?
Sure, yeah. So the percentage of completion method says you can only recognize revenue when you've incurred costs. And we're saying to date on this project, we have incurred no costs. So we've billed for $50,000, but we have no costs associated with the job yet. So we can't actually recognize that revenue yet, nor should we want to, because nothing's happened. We haven't earned anything yet, if that makes sense. And we want our financial statements to reflect what have we actually earned. Because if the customer all of a sudden says, we're done, we don't want to do this, they might ask for a refund. And if you're thinking that you've earned $50,000 and now all of a sudden the next month you owe back $50,000, so now all of a sudden you recognize in 1 month, oh, we had a $50,000 gain, now the next month we have a $50,000 loss. What's happening?
Mm-hmm. Right.
Whereas if you're doing this on a percent complete, you haven't completed anything on the project, so if your financial statements will reflect we haven't earned anything yet.
Mm-hmm.
Now, let's say we've moved on to the next month, and to keep things clear, let me hide these so we're not getting too bogged down with a bunch of other things. Let's take that out. So let's say in the next month, we weren't able to bill anything yet because we had our big deposit, but we finally started working on the project. We did our demolition, and that didn't take too much. We didn't have to buy too much. We had to go rent a truck. We had to have some labor go on. So we incurred $5,000 in expenses. We've still billed $50,000 to date. We haven't billed any more yet, but we had $5,000 in costs for that month, and that's all we accomplished that month. We just did the demo. It took us a month. That's why I went wrong. It should be a negative because it's the cost. So the way that I've built this is costs should be negative numbers. So we've spent $5,000, we've billed and potentially received $50,000. Our remaining costs are $65,000. We don't think there's going to be any overrun yet. So for that month, we can now say we've earned $7,000. And the way that math works is, if you're trying to work that out, is here's our expected margin is 30%. We're still expecting 30%. We're still expecting to make $30,000 on this $100,000 project. We're saying we've spent 5, so 5 times 130% equals $7,142 that we can recognize for that month as revenue. Because we did work, we did $5,000 worth of work, and to us, that equals $7,100 in revenue. I know this is a difficult concept to grasp, so I'm open to questions. Please bring them on, because I want this to be clear.
This is Sharon. Did you say that you did send us this example, and does it have formulas in it, or
It does,
it's just okay?
Yes. And if it wasn't received, I'm happy to share this. I did send this to the organizers, so it should be there to be sent out. Or you can email me directly. I can give you my email address at the end of this. Yeah, I'm happy to share this. Any other questions before we continue on?
Sharon, it was sent out earlier today.
Josh,
Okay, thank you.
I think you might be good to carry on. I don't
Okay.
see anything through the chat so far.
Okay, great. So let's carry on. So we're now in month 3 of our project. Our first month, we billed for $50,000, but we had no costs, so we couldn't recognize any revenue yet. Our second month, we did our demo. It cost us $5,000. We weren't able to bill anymore, and we were able to recognize $7,100 in revenue. So if you're looking at your profit and loss just for this project, you would see that your revenue should be $7,100. Your costs, your expenses should be $5,000, and you should be carrying a liability on your books of $42,000. So let's go into month 3. Let's say month 3, we incurred an additional $15,000. So our total costs are now up to $20,000. We had some overrun that we think cost us an extra $3,000. We had some extra time spent. So we enter that in our change order for cost of goods sold, but we don't think we're going to be able to charge for it. So we don't enter anything for our change order revenue. Because we did a little bit more work, we were able to bill an extra $5,000 for materials. So we've billed to date $55,000. And now this is our new liability amount, this over under billings. So that should be our new liability amount. The amount that we've earned in revenue to date on the project is this $27,000, and total costs are $20,000. So again, if you were looking at this on a cash basis, you might see this going completely differently. To us, we're saying that this project is going to cost us now $73,000. We've only incurred $20,000. If you're on the cash basis, to you, it still looks like your margin is to date is $35,000. It looks like this project is doing great because you have $35,000 in the bank right now for this because of this project. What you're missing is, if you're just doing cash and you're not doing this extra work, you're missing that you still haven't earned $27,000 of that amount yet, which is really important. And that's something that is a reason why when you go to a bank, they're really interested to see that you're doing this extra work. And if you're able to show them that you are managing your projects in this way, and that you have a handle of your cash to reflect this, that reflects really positively on you.
Can you share one more example, Josh? Because it does take a few practices to get this down. It's not just normal, you don't just do this every day. So
Correct.
if you could do just maybe a couple more examples for me would be helpful.
Sure thing, sure thing. So I'll unhide these. We can take these one at a time. So we have this project up here that's still under construction. So we think our final contract amount is going to be $900,000. Our costs are going to be almost $700,000, which means we're expecting our margin to be 21%, which is pretty good for this big of a project.
Right. And do you mind showing one of those with the change order to it? Because that happens quite a bit.
Sure. Yes, of course. So yeah, let's say so this project looks like it's pretty far along, right? We have an expected install date. We're maybe close to inspection. Look at maybe this one's a better example. This one here. This one's almost done. So our contract is for $240,000 now. We're up to 175 in estimated costs, and we've already spent 147. So theoretically, we're almost done with this job because we only have about $30,000 left on the big project. But we all of a sudden realize, okay, we're almost done, but this month wasn't good. It took a lot longer to get done what we wanted to get done, and we have to eat 20 grand in costs this month. So let's up our change order for our expenses to 20 grand. And before I hit enter, I'll show you how this affects what you're able to show as revenue and how under or over your billings are. So it's currently at 31,000. Now we're saying we're overbilled by 52,000. So that was a $20,000 swing on what we're saying we're able to recognize in revenue for that project.
The question I have is, what's the difference between a schedule of value and the WIP?
The schedule of value and the WIP.
Because the schedule of value seems like it does the same thing. So I was just curious if they are the same thing, because some projects will just, you incorporate that with your contract, is you give, if you're working for a GC or for an owner, you give them a schedule of values, and that means how you're going to bill on the project. Versus this is how much we actually did. So just say if you had mobilization, and that's up front, and that's the first thing you would need. So then you would bill them up front for the mobilization. And then next is you start performing work. So then by the end of the month, when you're supposed to turn in your billing, then that's when your next billing goes in. And so then it's a certain percentage of what you've done on the project, which seems very similar to the WIP to me.
Yes, yes, similar concept, yes. It might not give you the same financial results that you're seeing here because this takes into consideration what you think is going to happen over the remaining course and not just what has happened to date on the project. But yes, tracking your costs and revenues in that way in order to bill at a certain rate based off of what you've performed to date. Yes, it is a similar concept.
Okay, thank you.
How about others? Can I hear from others on if this is catching on? What would be helpful in order for this to really help you understand how this works and how it affects your financials? Would it be helpful to see this in QuickBooks?
Yeah, well, I know this is Sharon again, and I know that for the bond, they ask when you are turning in your application, they ask you for this for your WIP schedule. So versus your schedule of values. And so this is important if you are, bidding and you need bonds, bid bonds or payment and performance bonds, this is what they would ask for.
Mm-hmm. Yeah, so hopefully beyond, this is a bit of a set of complexities to really wrap your head around how the math works and how all this impacts things. But if you can take away one thing, it's here's a tool. The things that you would need to update in order to have this flow out, what you need to flow out are your contract amount, change orders, your costs, any overrun or change orders or underrun that you've noticed along the way, what QuickBooks is telling you that that this project has cost you to date, what you've billed to date, and then the rest will flow out to this dollar amount that you will adjust your revenue by for that month. So really all of this work is to get you to what have we under or over billed for. So to give you the opposite example, so say you have this $100,000 project and you estimate 70,000, but you haven't billed anything yet. You billed zero because that's how your contract is written. You can't bill until you reach a certain milestone. Well, this is going to tell you, actually, you need to be recognizing some revenue. You're under billed. So this schedule is going to tell you, actually, you need to have a different perspective on your financials. You should be seeing $27,000 in profit, actually. So be kind to yourself. Recognize $27,000 in revenue for this period, even though you haven't billed anything yet. You've earned it. You've incurred $20,000 in costs. You should be recognizing $27,000 in revenue because of what you anticipate and still anticipate to be making on the project when things are all said and done. Does that make sense? So this goes both ways. I think in the construction industry, most people are billing ahead of time, but it could be where you get to the end of a project and can't do your final bill until things are complete and keys are handed over. If you're building a house or what have you, that you might be underbilled. Your costs might be right, but your revenue might not reflect on a accrual basis by itself that you are going to make money on this project after that final bill is sent out. But you can't do it yet. You can't invoice yet because maybe you can't do it contractually. But this schedule will tell you, recognize that extra revenue because you have earned it. And as long as you are still convinced that you're going to earn that margin that you originally anticipated, you can recognize that revenue. and here is your support as to why, which a bank would be curious to learn as to, okay, why are you saying that you deserve more revenue than you think? It's, well, here's our costs, here's what we are still considering to be the final amount that we're going to be able to bill for this, and we don't have any more costs. We don't have that many more costs to assume. So this is why we think we can recognize this extra revenue.
Now, did you say, Josh, this is Sharon, did you say that you created this Excel sheet and then you imported it into QuickBooks, or you can actually create this in QuickBooks?
Yeah, so the way I do this when I make this for a client is I have this create a total. So for all of our projects, we're saying at the end of the day, we are overbilled. So we need to remove $135,000 from our revenue for this period in order for our revenue to be accurate. So what I would do in QuickBooks is I can, mine's still active, it looks like it is. I'll show you how to do that journal entry. I'm going to remember to switch screens this time because I've learned my lesson.
There was a question that came through really quick, if that's okay.
Yeah, of course.
Is it best to do the WIP Excel spreadsheet first before putting it into QuickBooks?
Before putting what into QuickBooks? Before putting your transaction information into QuickBooks?
It's not elaborated on, so I'm not sure.
Yes.
Okay.
Yeah, so the WIP Excel spreadsheet is relying on you having up-to-date information in QuickBooks already. So what we encourage our clients to do is to have a date each month. It can take time to get transactions entered into QuickBooks. We're aware of that. So try and have a date where you're going to have all of the previous month's information put into QuickBooks. So say your goal is to, by the 10th of each month, you're going to have all of your information from the previous month into QuickBooks, because you need all of that information up to date, all of those expenses that you've incurred, all of your credit card and all of your credit card charges that happened the previous month in, to be able to then take that information from that job for that prior month and have it churn out accurately the final result from your WIP workbook. So it's really important, and we'll talk about that in our final section for add-ons that you can get to QuickBooks Online or other accounting softwares to make that transaction entry a bit quicker, both from getting your time hours in and charged to the right clients. That can be cumbersome. That can take a lot of time. But if you're not able to get that information in very quickly, then you're not going to be able to have your WIP workbook updated to then know how much revenue that you made. And if that information is really lagging, that's another reason why it can be really hard to actually know how your company is doing if it's taking you a really long time to get your data in. So we'll talk about some tools that you can implement to get your data in a little bit faster, so you can then run your WIP workbook knowing that it's as accurate as can be and has all of your expenses to date on a project reliably.
Josh, does the QuickBooks give you benchmarking and timeline management options or a project timeline?
Not that I'm aware of. I've never seen it used that way. I know that there are add-ons that you can get to do that on top of it that will easily tie into QuickBooks. and have the appropriate data from that information be automatically uploaded into QuickBooks, but I don't think that QuickBooks itself does that, because that's pretty specific to certain industries, and QuickBooks tries to stay out of the being industry specific in itself and having specific product offerings like that.
Okay, thank you.
Mhm. Any other questions?
Doesn't look like there's anything in the chat right now.
Okay. Okay. Let me actually switch to have that conversation. Am I back to the PowerPoint? Can anyone see the PowerPoint?
Yes.
Okay.
Yes.
Okay. To reflect on how to continue to maintain your WIP workbook. Keep computing all of your WIP to all of your revenues and all of your expenses so that they're entered. Like I've been saying, it's really important. The WIP workbook is only going to be as accurate as the data that you're giving it from QuickBooks. So really try to use a month-end close timeline. Try to have a deadline that you're going to get all of your information in, that you can then relay to all of your project managers to make sure that they understand, I need your receipts. I need to know how much you spent on these projects quickly, because we're now tracking this so that it matters, so we can be tracking whether or not this job is successful, and therefore if our company is successful. I've seen implementing WIP workbooks really allow for a tangible challenge, a tangible new challenge to GMs or project managers to have somebody other than the owner to report to on a financial level. They owe you analysis and explanations for the ongoing costs of their jobs. They're not in charge of the revenues necessarily, but they should have a handle on what is costing them, and they should also be responsible for getting you the information timely so that you can be doing your job and reporting out to everyone whether we're doing well or not, and put that on their shoulders a little bit, because you deserve to have that burden, that chunk of burden, and getting expenses in timely off of your shoulders, and have them understand the urgency of getting all that information in, because it can really, really negatively affect things if they don't tell you about a substantial purchase that they made and give you an invoice 30 days late. They need to be able to understand that that information is really pertinent to understanding whether you're providing quality services and sustainable services. This might be a little bit of a stretch, but if you have these conversations with your PMs and GMs and they're telling you, yeah, but I can't get some of these invoices timely. Some of our vendors lag. They mail us invoices 30 days late all the time. You can start to track that yourself and say, okay, well, if we know that we keep buying X amount in these types of parts approximately every month, then I'm going to put in what's known as an accrual. I'm going to put in an estimate for this liability, assuming that this is going to come in for items that we bought for this period. And I'm going to book it as a liability so that we can better reflect the transactions that are happening in this month, even though we're not getting a record of it, and then truing it up when you actually receive the invoice later. Might be a bit of a stretch for some of you that are just new to this concept, but that can be a really important thing if you start to realize, okay, we have substantial costs that we're not realizing what they are until a really long time after we're actually purchasing them. And we need to start estimating what they are more regularly. And if you want to take this to the next level, you can also start analyzing your accounts receivable balances on top of it to be able to see, okay, well, we've billed $50,000 for this client, but have we actually received it yet? So that you can bounce the information you're gleaning off of the WIP schedule against your current cash balance. So some things that you can add on, some things that you can do to make your life a little bit easier. First thing that's always a pain point is time tracking. Getting that time into QuickBooks on enough of a level to be able to see what time went to what project. If you're doing it by hand, it can take a long time. If you have a number of people that are on the ground working for you, if you're waiting for their timesheets, if you're doing it all by hand, you have to wait till the end of the week and then you have to input it all. That can be really cumbersome. So products like T-Sheets or ClockShark, both of those integrate with QuickBooks Online. They are extra fees. I don't know specifically the cost. I believe each of them are tiered as to what your needs are specifically, but those are great time-saving products that will allow for mobile entry of time. So your employees can have a login and be able to, in time that day, be able to say, okay, I worked 8 hours, I worked it on this project, and it can then go to approval by a PM who clicks it off, and then that gets sent to T-Sheets, which then you can go in and see that information, and it will integrate with QuickBooks to then pull that information based on what somebody else entered and not you to be assigned to that project, so that you're not having to go through and, like I showed you earlier, do all of that manual entry to say, this person worked this many hours on this project. I got to do that for every single project, every single hour that they spent this week for every single employee that we have. That can be really cumbersome. And when you're trying to do this analysis of your expenses on each project in a timely manner, in order to know what revenue that you can recognize against it, it's really important, and it's a lot of times worth the extra cost of taking this off of your shoulders to track all of this and putting it back on the employees and their managers to validate the time they spent and what jobs they did. That gets sent to you and makes your job a whole lot easier for then taking that data and just taking that and putting it into that Excel workbook. It's a lot easier than having to do all of the manual legwork to get the information in timely. Because again, timeliness with your expenses is really, really key to having this work. Like I mentioned earlier, having a CRM, customer relationship manager, or a job tracking software can be really good in keeping jobs organized, efficient, and effective. Some examples are Salesforce. That's typically for some of the bigger companies, but I believe they do have more basic level offerings. Monday.com is one example of a job tracking. It won't have the same integrations to QuickBooks where your financial data will flow, but it'll at least allow you to have a better understanding of how far along your job is and be able to be maintained by somebody else and not you. And Builder Trend as well integrates directly with QuickBooks Online and does a similar thing to Salesforce, where you can build out the timeline of your jobs, and the GM or the PM can go in and be regularly updating that, so that you can then go in and look and see, is the progress of the job in line with how many expenses we have in QuickBooks assigned to it. And if there's a disconnect, that can drive those conversations, rather than you constantly having to be the one nagging your GMs and PMs for, can you give me an update? Can you give me an update? Can you give me an update? This allows that to be in their hands and and you can more easily see what information is missing and who is keeping up with the information that you need and who's lagging behind. So you can have appropriate conversations with the right people to make sure that they're being held accountable for the information that they're in charge of. And then expense tracking. I know that in this industry, that can be a big lag when you have company credit cards in a lot of different hands. You're relying on people to hand in receipts, or now take a picture of them and text them to you, or what have you. There's a lot of great tools out there for more automatically maintaining it, allowing people to use their smartphones to take care of those things in time, rather than them having to remember, okay, it's the end of the week, and okay, where did I put all the receipts? I need to, it can become a slog, and oftentimes us accountants are left with a bunch of credit card costs with no associated receipts, no idea what job they belong with, so they just get randomly assigned to miscellaneous projects, and that doesn't allow you to then accurately reflect and know, how are our jobs doing? I just had $1,000 spent today, and I have no idea what it was for, and we still have cash, so that's good. But if you can have some of these expense tracking utilities out there to make that process easier for those that are on the ground, it's going to make your job a lot easier to be keeping them accountable, because a lot of them link directly with the credit card itself. So it'll ping that person and say, hey, this receipt is still outstanding. Click this button and take a picture of that receipt now, so I have it, and just get it done with. Or it's just going to keep pinging you to remind you. So if that is a pain point of yours, I would highly recommend looking into some of those options, because they can be time and lifesavers for sure. And that's all that I have right now. If anyone has any questions, I can open it up to use the next 15 minutes to answer any questions or go over anything again that would be helpful. I can, let's see, let me go into the chat. I'll put my email address there, because I totally forgot to put it in the slideshow. Feel free, please do email me with any questions that you have. I'm happy to help and continue working with you guys to understand and implement some of these a little more difficult concepts.
Awesome. Thank you, Josh. Yeah, if anyone has any questions, you can go ahead, feel free to put them in the chat box. If you would like to raise your hand and ask him live, you can do that as well. Give everyone a few minutes to see if there are any questions. Nobody has just one question for Josh before we end. I'm thinking maybe not. Maybe you explained everything so well I don't have any questions yet. Okay, actually we did get one. So they said, with the WIP Excel sheet, does that just show a point in time snapshot of the WIP?
Great question. Yes. So that ideally would be updated monthly. So yes, that is the goal of that, is to put in all of the relevant information for each project up to a point in time. So ideally that point in time is the end of each month, which you're then taking and updating in your accounting records for what your revenue should and shouldn't be for that period. But yes, ideally you're tracking that and creating an updated version of that each month. So it's something to be amended. Project should be erased once that project is complete because you don't need to be tracking it anymore. But obviously you don't want to be taking it off of that sheet until you know for sure that all of your revenues and expenses have actually taken place for a project. I've seen that happen where some clients are too quick to remove things when they thought that they did really good on the job, and then that invoice comes in 30 days later for $10,000 that the PM conveniently forgot to tell somebody about. So that client had to recognize a $10,000 loss on that job 2 months after they thought they finished the job and had a really good margin on it.
All right, next question is there a simple way for us to double check the WIP numbers in QuickBooks?
I'm assuming that's referring to the WIP number that the Excel document is producing for you. If that's correct, which I'm monitoring the chat to see if that can be confirmed.
Could we pull a report for that particular job, and then we would see what the WIP is to date?
Yes. Yeah.
Which is something that I can definitely go over as well in the reporting class.
Yeah, that could be helpful.
So I will add that to my reporting class list.
Okay, perfect. I'm not seeing any other questions at this point. You guys all had a lot of really great questions today. So I suppose on that note, maybe we can give everyone back about 10 minutes. We definitely want to thank Josh and Juliana for joining us today. We will be having another session again next Tuesday, so make sure that you do join on there. Oh, actually, we did have one last question here, if you don't mind, real quick. It is, will QuickBooks Online be replacing the desktop contractor version? Do either of you know a set answer? I know that we kind of asked some of that on Tuesday too, and everyone said it was kind of phasing out, but.
I wouldn't anticipate it in the near future, but I would venture to guess that in the next 10 years, it's a rough guess, I would say in the next 10 years, QuickBooks Intuit will probably stop supporting desktop versions. That's my rough guess. I think there's still too many companies that aren't on the cloud and feel comfortable using online and cloud-based products yet. So I don't think it would behoove them to completely eradicate those types of things. But I would begin to start familiarizing yourself with the offerings out there for some of the cloud-based accounting systems, because I think that is the eventual future.
And if I could add something, I noticed that even though we weren't able to go over the timesheets tracking, that allows you to break down your employees' hours by class, location, customer, and GL account. And it's just not something that they're offering in desktop. So I think that's just an example of the fact that they're adding all these enhancements to QuickBooks Online, and they're just kind of cutting it off for QuickBooks Desktop. So it's still available, but I think we're going to find the technology to be a little obsolete eventually because they're not spending a ton of time enhancing it. So just something to think about. And then you asked, what can online do that the contractor desktop version, or can online do what the contractor desktop version does? That's a really good question.
I think there are still some limitations, some things that they haven't included in QuickBooks Online that desktop does. It's a little easier to do overall job tracking in desktop than it is in online. Online's a little bit more geared towards generally the smaller businesses with less projects and doesn't the bigger contractors that I work with are not on QuickBooks Online. The ones with 50 plus projects struggle using what's currently on QuickBooks Online. That doesn't mean it's impossible. It doesn't mean that you'd be wrong to be on QuickBooks Online with that many projects. But there are still things that desktop versions can do that QuickBooks Online can't. But I definitely think the Intuit is making every effort to integrate as much into QuickBooks Online as they can as quickly as possible, because that's where they're putting their energy long term.
All right. Does anyone have any final questions for Josh or Juliana?
And if something comes to you later, feel free to give me an email. I'm happy to chat.
All right, perfect. Again, thank you both for joining us. Like I said, we will be having another webinar next Tuesday, so make sure that you register and join us there. If you do have any other questions that either Josh or Juliana can answer, go ahead and give them an email. Don't be scared to reach out to Lily or Jessica either. So I want to wish you guys all a great rest of your day, and we will see you all again on Tuesday.
Thank you, Heather.
Thanks, everyone.
Bye-bye.
Thanks.
Thank you.
Thank you.